is the bull run over, particularly for altcoins? A lot of people are actually saying that this cycle is over and I cannot believe I didn't make money this cycle. Why are altcoins like this? They're never going up. And I just want to tell you that this is not what I believe is happening. In fact, I really believe we are in a right translated cycle, a very delayed cycle. And there are a lot of signs that point to this, even though when I'm doing my research, there are also a lot of signs that points to short-term chop as well. So we are certainly in historical times. A lot of noise happening with Trump promising to make America the great crypto capital of the world. And meanwhile, the altcoin markets are suffering. So I want to summarize with today's video about all the actions that came from Trump, from his crypto policies. A lot of them actually don't matter. And also both the tailwinds and the headwinds that actually affect how we are getting this bull run, specifically coming from the Fed and the US Treasury, mainly around how liquidity is shaping up for the rest of this year. Which part of this year are going to be difficult and which parts are going to be easier? When can we expect that to come? And what kind of trigger events do we need to watch for? So I'll tell you which events are important versus which events that are only noise. And after covering all of this, just briefly, I just want to lay it out for you guys first. Then I'll give you guys my perspective on why this crypto cycle has felt so difficult, but it's not over yet. In fact, it hasn't even truly begun yet for altcoins to have any sort of bull run at all. By the end, I'll also give you guys some perspective on my current portfolio. Nothing really has changed just yet, but make sure to watch till the end if you want that update. Okay, welcome back to the channel. If you guys are new here, my name is Dennis. I'm a crypto angel investor for the past 6 years, and I have invested in over 100 crypto startups. On this channel, I share views on market trends and investing strategy to build wealth in crypto. Now, let's get straight into it. And I want to start off with some pointers on the noise that's currently happening in the market. So aside from the price action, this past week, we have seen just announcement after announcement coming from the Trump administration around the crypto summit being held at the White House. And apparently, this is a big event. And you also have World Liberty Financial, the subsidiary, the DeFi company ran by the Trump family. They are owning, large amounts of tokens on chain. A lot of this don't matter, right? So because the signs are there. So first off, every time that the Trump family comes out and tweets about something about an altcoin, most of the time it's not really coming from the administration. It's instead from the Trump business organization. So most of the time it's a partnership where both sides are benefiting in some monetary way. Obviously, just think of it like marketing. So I wouldn't read into this too much, first of all. And also at the crypto summit, this is really more of a what do you call it? Like a ceremonial event, if you will, for all of the big donors to Trump's campaign and the big contributors that really just have money that need to be recognized. But that's about it. So even later on, when Trump had already established a digital asset stockpile, including Solana, Cardano, XRP, his spokesperson, David Sachs, the crypto czar of the White House, had to come out and say that the president just mentioned the top 5 cryptocurrencies by market cap. So really, this is not saying anything at all. And there's no official bill that says, oh, the US Treasury needs to buy this and this token. Worse yet, we don't even have the Bitcoin strategic reserve that actually buys any more Bitcoins on top of the existing holdings. I listened to Trump's crypto summit as well. In there, he specifically said that his goal around the Bitcoin strategic reserve is to not sell Bitcoin. But he also clearly said, word by word, that we don't want to use any taxpayer dollars in our crypto initiative to buy Bitcoin. So they're not even buying Bitcoin. Why would they buy any altcoins? So none of that just makes any sense. And on top of that, you have so many people around the Trump family that's just, I don't know what they're doing. Like Eric Trump is literally tweeting for people to buy ETH, and then ETH is down a lot since last month. So I really would try to avoid a lot of the news around altcoins coming from the Trump administration at the current time, because these are really small events. What's driving the bigger altcoin push that hasn't happened yet is around liquidity conditions. This is what we have seen in the 2017 and 2021 cycle, and so far we haven't seen that yet in this cycle in terms of liquidity. We'll dive into that in a bit. So I would ignore anything coming from Trump about altcoins. And also, just a little bit more context on news that don't matter is around altcoin ETFs. So nowadays, it really seems quite easy to file ETFs for your altcoins. However, you do have to note that these are only filings. Just because they're allowed to file doesn't mean that they will get approved. We have seen that the ETH ETF took forever to get approved. And directly coming from Bloomberg's top analysts, Eric and James, they have stated that Litecoin, HBAR, Solana, XRP probably will have ETFs, but even they will take a long time. And when you consider the fact that the ETH ETF didn't have inflows until Trump really came into office, which was 8 months of nothing, these really don't have effects. So don't read too much into new altcoin ETF filings. They're not approved, and they won't even have any inflows until we see 10 other much larger altcoins get the full treatment yet, which is going to take probably 1 to 2 years down the line. So don't read into ETF news too much. All of these are noise, and they are only going to hurt you right now in this market condition if you're trading them. So lastly, on the noise part, what doesn't matter is the tariffs. The tariffs situations are not benefiting anyone. So they are really just negotiating tactics used by Trump against China, against Canada, Mexico. You got to remember, the rule of thumb is that tariffs hurt both sides of the trade. They increase costs for both countries. So the fact that Trump, every time he threatens with tariff, but he backs down and delays and then just threatens again, is really just a negotiating tactic. We're not going to have long-term, much higher tariffs as a conclusion. I highly doubt that. So these are spooking the market, but don't read into them too much. So I wouldn't take tariff news and use that as the conclusion for why your altcoins are not pumping. That's completely not related. So with that out of the way, what is really happening then? Why is the market like this right now? There has been recession fears resurfacing just recently, just in the past week. So I believe the Atlanta Fed came out and published the slowdown in GDP growth. So the classic, rough estimate, the soft number to estimate a recession is 2 quarters of negative GDP growth. This, however, is mainly not that accurate because during the Biden administration, we had negative 2 quarters of GDP growth already, but there was no official recession. Now, I have talked about this in a previous video, probably in August last year, going over why these recession signals are so noisy. The summary there is that although we have been in soft, recessionary conditions where the economy is very slow, jobs are bad, etc., and we all know this, the official statement is that we haven't started a recession. And that's because there is only one bureau, that's a government agency, that decides when the recessions are officially in place. And that's these guys, the National Bureau of Economic Research. And when they announce business cycle datings, look at these shadings. These are the official recessions that we have had since 1979. And the only number that they look at is the unemployment number, which is right here, unemployment rate. And whenever unemployment rate shoots up, essentially we have a recession. So the fact that we again have fears of recession is instilling a lot of fear, but you should not trade this news as well. We can all agree that we have been in recessionary conditions, but whether or not there will be an officially announced recession is not dependent on any data, in fact. We even know that the unemployment data and the jobs numbers have been heavily skewed before. Last year, we have all heard the news. So really, it's a tool. It's a tool when used in the right time, gives the politicians and the agencies and the government an out, a way of saying, oh, something broke in the system and thus we can make a big pivot. That's really what the official recessions are used for. So it's really, if you think about it, it's meant to drive fear in the market. It's really not meant for helping anybody. So that's what I would say about the talks of recession. Don't read into it too much. The rough numbers I can give you is right here. So currently we are at 58% chance of a recession that is happening right now in March 2025 of probability done by surveys based on analysts. Now, you see how even though we have these probabilities and the probabilities can project into the future all the way to November, how does this even work, right? So people say, oh, we have declining GDP growth and so, thus we are already in a recession, right? So it's really, you see, it's not black or white. It's really, this probability is mainly saying, what's the chance that the government agencies will declare a recession and declare that retro-dated, we are in a recession right now, sometime in the future. So what I mean by that is, even worse, when the National Bureau of Economic Research, when they announce a recession, it's always backdated. So when they announce the business cycle dates, let's say they make an announcement today, it wouldn't say that, oh, starting from March 10th, we are starting a recession. No, they will say 3 months ago, a recession has started. That's how that works. So that's why, even if we are currently in a recession, we are not going to get the official confirmation until much later when the recession is almost nearly finished. So that's why you can project these probabilities of announcements going into the future. And one more data point I want to draw your attention to is this decline by the end of the year. So why do a lot of economic analysts project that the chance of a recession being declared is much lower by September, October, November, Q4 of this year? That's because we are really in this air pocket of liquidity from now until about Q4 of this year. Once Q4 rolls around, there are simply way too many hurdles for the US Treasury around the bond market, for individual banks in the US, for their reserve levels. A lot of things are going to come into pressure that the US Fed has to have done something by then. So that gives us only this period of uncertainty until Q4 where a recession could still be pushed as a narrative, but if it doesn't happen until then, highly unlikely for it to happen after. So that's the rough estimates that we have for the recession right now. So don't look into it too much. It's always going to be retro-dated, and there's no point in trying to predict when they are going to announce a recession, because again, they can announce it whenever they want, and it's always going to be going back into the past as for the dates. Okay, so then, is the bull run over? Well, my answer for myself, my framework after looking into all of these metrics is that no, the bull run is not over. I have done videos on this before. There's a video on the channel called The Myth of the Bitcoin Cycles. So TLDR there is that the 4-year cycles based on Bitcoin halving events, they are not accurate. There are only 3 previous data points that truly matter. And even those 3 don't match up at all. Sometimes it's too short, sometimes it's too long. So whenever people give you this hard dates that the 2 years after the Bitcoin halving event has to be the bull run, otherwise the bull run doesn't happen, that's just a flawed framework in my eyes. The real driver for crypto, especially around altcoins, is global liquidity conditions. So when we have Bitcoin being in a macro uptrend, and you look at Bitcoin right now, it is still in an uptrend since November 2022. This is an uptrend, higher highs and higher lows. You guys know exactly how to identify an uptrend. So when we have Bitcoin being in a macro uptrend and goes up eventually to frothy levels, and the liquidity conditions being easy for risk-on assets, then altcoins at some point have a very large and sudden bull market. Most of the time, it's going to be towards the late time of the Bitcoin cycles, but they always happen. So just look at the Bitcoin dominance chart. What were the last 2 altcoin cycles? Right here, starting from summer 2017 until January, February 2018, when Bitcoin dominance was dropping very aggressively. And then again, right here in Q4 2020 until mid 2021. So around both of these times, right here, was when Bitcoin was breaking new all-time highs and at least 2 to 3x above previous all-time high. And at the same time, global liquidity conditions were good. So there are plenty of ways you can track global liquidity. The simplest one is by looking at the U.S. Federal Reserve balance sheet, WALCL. Let me see if I can get this on the chart here. No. Simplest way you can track this is using Federal Reserve balance sheet right here, and you see the pivots right here marked the bottom of the bear market, and then right here liquidity conditions were basically normal. At least it wasn't going against us. So the fact that previous 2 times Bitcoin uptrend, liquidity conditions are good, and altcoins eventually had that pump, why do we assume that just because 2 years have passed? Has it been 2 years? The number skips my mind, but we are not even at that late stage past the Bitcoin halving event yet. So I don't understand why people are giving up on altcoins right now. The only reason I can think of is because the sentiment is so bad, because people really expected too much and too early, too quickly from their altcoin bags this cycle. In the meantime, they just kind of ignore that Bitcoin has been slowly going up. So when you look at Bitcoin, really, what's there to worry about? Sure, it could drop, but is this like catastrophic? No, of course not. This is fine. This looks very much just like bull market correction to me. So what really matters here then, because we know that Bitcoin is still in an uptrend and we know that altcoins haven't pumped, what's the third condition here? And that's global liquidity. So when can we actually get the global liquidity events to trigger? And why is global liquidity so tight right now, to the fact that it's squeezing altcoins dry? Just look at, like, for example, on Ethereum. I mean, this is just sad, right? $1,800 for Ethereum. I don't even know what Solana is. Solana is at $120, 50% off from January levels. What's really happening here? So a lot of people will say, will reference this number, the global M2 growth, the money supply. Right out the gate, I'll tell you, this is not the number you want to look at. This is not the real liquidity number. It's nice to look at this because M2 always goes up, and you can always make the case to say that long term, M2 goes up, Bitcoin goes up. Now, the only reason that is true is because M2 always goes up because the money printer is always long-term ongoing. There's always more and more inflation. And Bitcoin, over long enough horizon, is always anti-inflationary. So it's good for very, very long term. Let's say you project 10 years down the line, but for 1 to 2 years, it's not accurate. The real global liquidity numbers, the best indicators I find are two places. So the free one you can use is something called US Fed net liquidity. You can just Google this. There's a website I use called Guru Focus. I only use this one indicator, by the way, on here. But this is quite accurate. And you can also find the same indicator on TradingView. So just plug in your Bitcoin chart, and then you can go into your indicators, type in US net liquidity. And this is this one right here. So this is a much more accurate representation of the current state of the liquidity coming from US. And if you want to go a step further and look at the global liquidity as a whole and really understand the whole dynamic, then I recommend you guys to follow the research done by Michael Howell at Capital Wars. He is really the forefront expert in this field. And weekly, he puts out these global liquidity reports that you can read. And he also is a big Bitcoin and crypto macro analyst. He really does not fear about talking about the correlation between Bitcoin and liquidity, etc. And he has given very clearly the first of all, the correlation between Bitcoin and global liquidity. So Bitcoin, as a matter of fact, is the most reactive asset to global liquidity conditions. And even more, the only higher reactionary assets are altcoins. So this is why altcoins are even just higher leverage Bitcoin when it comes to global liquidity. And he also was the first to point out that the 4 to 5 year cycles roughly are really not driven by Bitcoin halving events, but instead by global liquidity cycles. So I've been studying his material a lot, and a few takeaways I can give you here. Number one, global liquidity is still rising, albeit it's seeing a air pocket like we have described from now until Q4, but we haven't seen the peak yet. And the peak is likely to come sometime in Q4 this year, maybe early 2026, based on the last 50 years of data. So this is the first major point for why the crypto cycle is not over yet. And second is that in the short term, this mid-cycle bloodbath we're seeing, how can it be explained? It can be perfectly explained by the current squeeze in global liquidity if you understand how different factors compile together to form this liquidity condition. So there are really 4 main drivers of global liquidity. Number one, the U.S. Federal Reserve liquidity. So the U.S. Fed liquidity number right here, this one, is basically the same, this driver here. Number 2, China. China's liquidity, whether China is easing, driving stimulus, or they're tightening. Number 3, the strength of the dollar. You can follow this with the Dixie index. And number 4, the use of collateral, mainly the bond market. So how volatile is the bond market? So out of these 4 conditions, currently the bond market is okay. It's in regular conditions. And the US dollar, you can follow this directly on TradingView. Just go on TradingView, type in the ticker DXY, and you'll see the US dollar is currently actually falling in the past week. And you can't say this is very, uptrending like this anymore. It's at least consolidating sideways, which is actually very good for risk-on assets. A weaker dollar leads to higher liquidity. Just take that rule of thumb and remember that. We need dollar to drop in order for asset prices to rise, generally speaking. So the Dixie is okay. The other factor, China. China is actively easing as we speak. So China continues to ramp up stimulus to guard their economy because the Chinese economy is actually way worse than what we have in the West right now. I have been in China in the last year. It's honestly quite bad, and they are really showing very openness to even like capitalist changes as we speak. So China is just waiting to ease, waiting to turn on the money printer more aggressively. But they cannot do so at the full scale until we have the US dollar dropping significantly and the Fed coming out and introducing easing conditions as well. So that leaves us with only one factor that really is limiting all risk-on assets. Not only for Bitcoin, not only for altcoins, but also, for example, for the NASDAQ. So when you look at the NASDAQ, the S&P, the overall stock market, any of the major indices are just really terrible right now. These kind of drops on the S&P is, this is pretty messed up. So if your altcoin backs are dropping, it's not because, altcoin market is over because the 2-year timeline has run up after Bitcoin halving. That's just foolish to think that way. It's really because everything else is dropping because liquidity conditions are tight. And what is tightening the liquidity condition right now is coming from the Federal Reserve's liquidity choices. So this is why I have followed the FOMC meetings so closely for the past year. I was one of the first to really point out that the FOMC hinted in May of 2024 that they were slowing down the runoff of their balance sheet. So they were slowing quantitative tightening and they were potentially going to start quantitative easing. And I did the homework and analyzed that usually 3 to 8 months after they make the first warning is when they make the full pivot. So that leaves us 8 months after May of last year, which gives us about January of this year. That's why I was very optimistic for a pivot to come in the January FOMC meeting, but it didn't come. In fact, we got something way tighter and way more aggressive of a stance coming from Jerome Powell. So in one of the testimonies in February, so last month, Jerome Powell, the Fed chair, has said that QE is a tool we will only use when rates are already at zero. The Fed remains a long ways away from ending QT. This was way too aggressive. This really showed me another side of the Fed and the FOMC, which tells me they're really not trying to do the best of their job to support the economy or support asset prices anymore. Instead, it's really turning way more political at this point. As we speak, why is the Fed not able to just start the money printer again? I surmise there are a few reasons. So number one, of course, inflation is not at the Fed's target of 2% yet. It stopped, I believe, 2.5%-ish, and it started to take back up again. Now, it's not like we aren't feeling the inflation ourselves. We all are. We know that as spending prices are going up, living standards are not going up, and it's okay. People don't really believe even that inflation is going to slow down anymore. We all know that it's going to be an inevitability. But really, the political part of this is that the Fed needs a way and needs an excuse to say that, wow, look, the economy truly broke down. So we have to adjust our inflation target. So it's not that we didn't do our job, but instead, this thing broke. and it's not up to us, but now we have to settle with this. We tried our best. But in reality, what they are sacrificing here is really the short-term volatility of the markets, and that's what's happening. So what needs to happen for the Fed to start easing again, and when can this happen? So there are, fortunately, some good signs coming up. So number one, on the FOMC's website, during their latest meeting, they had their meeting minutes on January 28th and 29th, and they have made just one-liner here. In their expectations of the Federal Reserve balance sheet policy, this is the QE/QT balance sheet policy. Survey respondents, these are the people that work at the Federal Reserve, on average saw the process of runoff concluding by mid-2025, slightly later than they had previously expected. So again, they even recognize that it's going to be slightly later than they previously expected, which to me was, most people expected it should have happened by now. But they are giving the date to be mid-2025 to conclude the runoff of their balance sheet, which just means stop selling assets that are on the balance sheet. So stopping QT. But there's also a big difference here. You can stop QT and just let your balance sheet remain normal and remain at the same condition. And there's the other pivot, which is to start increasing the balance sheet, which is turning on the money printer and introducing QE again. So they even don't have any plan, any hints on when they will reintroduce QE. But at least we know that by mid-2025, middle of this year, June, July, August month, we could see QT ending. And at least that's a good sign. So that's going to be a big relief that adds to the first and the main constraint that we have right now in global liquidity, which is Federal Reserve liquidity. So that's the first first hint that the Fed has given us. Now, there are quite a few other upcoming deadlines that will force the Fed to act by the second half of this year. So number one is that the Fed is running out of other forms of liquidity to support bank reserves, to support the bond market as a whole. So when you Google Fed net liquidity, there are three components that make up this number. So we have the Federal Reserve balance sheet. That's directly means when the Fed has a policy to increase or decrease their balance sheet holdings of assets. And then you have the Treasury General Account. So this is the checking account of the U.S. Treasury, not the Federal Reserve, but the U.S. government. And this number currently is not that high anymore. So you can track this in real time on St. Louis Fed website. And this checking account of the U.S. government currently sits at $550 billion, which is not big compared to some of the other numbers that are coming up in terms of their liabilities. And lastly, you have the reverse repo facility, which is part of the Federal Reserve. And this facility has been nearly completely drained now. So by April 2023, there were $2.2 trillion available of liquidity in here to be taken by banks in exchange for their collateral. So these are basically cash ready to be lent out to banks. However, now this has been completely drained. So when you consider that this facility is completely drained and the Treasury General Account isn't really that big anymore, so these are the assets that are left over to support banking reserves and the overall financial system. And what are the liabilities coming up? The major ones. So first of all, we have the US debt ceiling. is counting down as we speak. So the US government needs to draw against their TGA to manage this weird situation that eventually will lead to the increase of the debt ceiling again. But there's going to be shenanigans. They need immediate cash to on hand to facilitate this. Number two, the US has a large debt maturity wall that's coming up this year. So nearly $3 trillion of the US debt is expected to hit maturity in 2025. What does that mean? That means the US debt, whenever the US government issues debt, it comes in the forms of US Treasury bonds, US Treasury bills, coupons, etc. These are basically the US government loaning money to borrowing money from consumers, from banks, from institutions in exchange to giving them a government bond to be paid back later with interest. Now, a lot of this is expiring this year. Especially large is this maturity wall of nearly $3 trillion because over the past 2 years, the previous U.S. Secretary of Treasury, Janet Yellen, has been issuing a lot more Treasury bills versus Treasury bonds. So short-term Treasury instead of long-term Treasury. The ones that expire at 1 year or less in duration. So when they do this, the US government is effectively able to inject the liquidity without having the US Fed even having to step in. So they have been doing this stealth QE since 2022. And Michael Howell from Capital Wars have also noted this before. So not QE and not yield curve control has been underway since effectively 2023. And this peaked at around early 2024 and has been decreasing. So this basically, to summarize, is that Janet Yellen, the previous US Secretary of Treasury, has been kicking the can down the road by issuing short-term debt and using that liquidity to support the government. And that debt, because it's all under 1 year in maturity, is quickly running up. So that debt needs to be paid back. And the current U.S. Secretary of Treasury, Scott Bessent, needs to refinance this debt, nearly $3 trillion just for 2025, but there's going to be a lot more in 2026. All of these short-term debt needs to be refinanced using long-term Treasury bonds. And in order to do that, there's a big problem because, well, nobody really wants to buy bonds right now. So what's going to happen? Who is going to buy these? They could use the current liquidity that they have, but as we have seen with, the TGA account and the reverse repo purchase facility, like nothing's really there anymore. It's not nearly enough to support all of this. The last buyer of resort is the U.S. Federal Reserve with their balance sheet. So that's why by Q4 of this year, when all of this debt is maturing and needs to be refinanced, more liquidity will be needed. That's another impending clock that's pushing the Fed ever more tight, and they will need to act. They cannot keep doing QT forever. So all of these signs point together. And last but not least, there is even an impending shortage of reserves coming from the regional banks. So as Michael Howell from Capital Wars have done the research on this again, so US regional banks are also getting significantly pressured with their reserve levels. And if nothing is to be done, because these guys don't have the reverse repo facility to draw against, to borrow against anymore from the Fed, if the Fed doesn't turn on the money printer, by sometime in Q3 of this year, he even estimates around mid to July of this year, if the Fed continues to sit on its hand, the US bank reserves will meaningfully dip below the danger threshold, which could lead us to another potential crisis situation like what we have seen in the SVB First Republic banks back in 23. So all of these point to first signs of something to break around the summer month, June, July months, where the Fed might be forced to do something. And then by, let's say, late Q3, early Q4, they have to do something. If they don't do anything, by then, it's really bad. It's a lot of things are going to fall apart. So this is roughly the timeline. If the Fed continues to be political about this and they don't want to work with Trump and they just want to save face and not turn on the money printer and just keep going at this, then even then, we are not going to get this same tight liquidity condition much later on until Q4. By the time Q4 comes around, things has to change. So that's why earlier when we were looking at the recession probabilities, most economic analysts are predicting that if we are going to have a recession official announcement, it's got to happen before Q4, before September. By the time October rolls around and November rolls around, the more time passes, the less likely we will have a recession by then, because the Fed has to have done something already. Okay, so that's the timing, and that's what the Fed is currently looking at. But you gotta know this ultimately. We know that inflation is an inevitability. Okay, we all feel it. We know that inflation is gotta be way higher than 2%. We know that the Fed and the government is trying to get this inflation to this like somehow magical number of 2% for the sake of us, even though we're all suffering. And it's more political than anything, which means if they don't achieve that 2% goal, then they cannot easily lower interest rates and easily turn on the money printer, which means they have to cause a fuss, cause something to break in order to change their previous goal, raising the target of 2% inflation to maybe 2.5 or 3% or something, and then doing this the same thing again, lowering interest rates, turning on the money printer. So before that happens, before all this political bullshit finishes sometime in Q3, Q4, we have to sustain this period. We have to survive. There is most likely going to be more chop. There is absolutely no need to be too impatient and just really trying to buy up all the assets in the world right now, because you'll have plenty of time when this all blows over. However, long term, because inflation is an inevitability, because money printing and the lowering of interest rates is still an inevitability, just delayed, the bull run is not over. Bitcoin, back to our initial discussion, still in an uptrend. We are at 78,000. Sure, that is a lot lower than 100K that we had in January, but last September we were at 61K. And is Bitcoin in an uptrend? Yes, it is. Higher highs, higher lows. Very simple, right? You can draw your thing wherever, however you like. And even if Bitcoin, just continues to chop in this range, what's the worst case scenario for us? Well, just use your very basic EMA or SMA indicators, right? You have the long-term indicators versus the short-term indicators. Long-term indicator 200-day EMA is at 82,000, 83,000 right now. Bitcoin is slightly below that already. Historically speaking, as long as Bitcoin is in a macro uptrend, when you buy at these 200-day EMAs, you are at a very good position. Look back right here at these dips. Sure, it can wick below and get a lot lower even, but look at this, it's just a wick. Here again, and usually when you get bounces, when you revisit slightly below the 200-day EMA, the subsequent bounce you have is going to get at least towards the short-term EMAs again. The 100-day MA, the 50-day MA, 20-day MA. And these moving averages need to converge. They need to squeeze together before the markets rally again. So I think we could get even short-term reliefs. Now that we are already below the 200-day MA, most people are truly capitulating right now. But look at the 100-day MA, 89,000. I really wouldn't be surprised if we start to get some reliefs. So what's my action point then? Knowing this kind of typical pattern, knowing that Bitcoin is still in an uptrend, and we are at the 200-day MA, and we could potentially see bounces, at least in the relief in the short term. So my plan is this. I haven't sold any of my portfolio holdings. You can still see my current track. It's quite bad. Our portfolio peaked at over 200K. Currently, it's at 83K. So I'm down just about 60%. I would like to offer you this perspective. So if your portfolio is in a similar state as mine, you can think of it like this. By December to January-ish, when our portfolio was at all-time high, look at Solana. Solana was at $230, $240, $250. Currently, it's at $120. Is it 60% down? No, it's around maybe 50% down, but it's not by a long shot. So consider maybe you went all in on Solana in November, December, January, and then you're now down 50%. What's then your action going to be? Do you feel as bad? If the answer is no, then I don't think you need to beat yourself up too much. That's the whole point of having a portfolio. Sure, a lot of the other altcoins that I have on this list are down, but I'm very lucky because I always keep a high percentage in Bitcoin, Ethereum, and Solana. And that has really saved me here. And at current point, in order to keep my sanity, I'm just telling myself, hey, I have roughly timed the market wrong and just consider myself, having aped Solana above $200 and it's down 50%. That's about it. What's my action point then if we simplify the framework like that? Well, knowing that we're going to have at least another few months of chop, and also knowing that the bull market is not over, and knowing that Bitcoin is at a really good value range and is in an uptrend, my action point then is this. I'm going to wait. If we get any relief rally, let's say we get back to the 100-day EMA or 100-day SMA, whether that's, bit of chop when the 100-day and 200-day MA meet together, at these points, maybe it's time to make the same action. But if we get any relief rallies, I'm going to look to sell my low caps and mid caps and look to buy up more Bitcoin and still keep some exposure in the top narratives, but only keeping one, maybe two altcoins in each category that I truly believe in, that I have held and studied for multiple years, for the altcoins that I have always held and I know will make a comeback. So I'll make updates on that when I actually make these actions. But I think you will have time to do that. As Bitcoin is falling off a cliff like this, if you're capitulating right on this spot, it's kind of foolish. So we will get relief rallies. I think you should take advantage of that and be prepared for another 3, potentially 6 months of chop. After that point, most people would have capitulated. If we get that long of a chop, truly, this is going to be one of the most difficult times in crypto, in all my years in crypto. This is both the timing of it, how many people are bought into this 4-year cycle theory, and just how much noise there is. It's really hard to survive this period. So if you agree with my analysis here, if you agree that liquidity is the condition that drives altcoins, not the 4-year halving cycles, then you have to see the bigger picture, which is that liquidity conditions has not started yet. It has not eased. The Federal Reserve is actively shrinking its balance sheet. Okay? And the reverse repo facility is drained fully. So there's no more liquidity to draw against there. The checking account of the US government is nearly finished. And all in the meantime, a huge debt ceiling is coming up, debt rollover is coming up, and bank reserve problems are coming up. So liquidity needs to be injected by the end of this year, latest by the end of this year. We should start to see some signs of easing start to come by the summer months, as hinted by the Fed. When that comes, when you see that news being released from the FOMC statements, don't be one of those guys that says, oh, the bull market is over because we're now 2 years past the halving event or whatever. Make that pivot. Get back in the altcoins when they are near bear market lows again. A lot of altcoins are near bear market lows again. So conserve your capital, but keep the same belief. And if you're with me, if you agree with the same analysis, the bull run is not over. The bull run hasn't even started for altcoins. So conserve your capital, whether that's keeping some in cash, or in my case, I really like to keep it in Bitcoin at the moment, and just wait. Wait this out. Wait till the liquidity conditions improve from the US Fed, and I'll keep you guys updated. But at the same time, don't chase these short-term narratives. There's nothing to do right now. From now until at least June, July, don't play any narratives. No matter what happens, what kind of hot launches happen, don't do it. Conserve your capital, wait for the conditions to ease up, wait for the easy bull market to come, and it will come, and then shoot your shots then. So that's kind of what I'm currently thinking. I'm really down bad, to be honest with you, and my personal portfolio, everything else, mentally, just trying to hang in there. So, I've really just spent multiple months trying to study all the material that I could find, and these are my summary. I think it will come. I don't think the bull market is over. I think we will have the bull market. It's just much delayed. Think in terms of a 2017 cycle condition where Bitcoin was slowly grinding up, where altcoins were just not doing anything until the very end of 2017, where you need an easy mental framework, 2017 is very like this year, 2025. So by the end of the year, we should start to see things really ease up. And conveniently, 2017 was also the post-election year as well, Trump 1.0. So maybe that has some, easy mental correlation that you can draw upon as well. Do whatever you need to survive and keep your belief in the bull run alive. Okay, that's it. So I don't have real actions that I can give you right now that can save your coins from being in large drawdowns. It is what it is, but just know that everyone's coins are largely drawdown. So no matter who you ask, it's going to be similar numbers. So don't worry about it too much. Hang in there. We'll be okay. Don't do too much as well. And okay, I will be making follow-up videos on where I see Bitcoin going. So I think really this cycle, in this mid-cycle correction, is really separating the Bitcoin market versus the altcoin market. So look out for a Bitcoin video coming up. And when I actually make my portfolio update actions, I will make a dedicated portfolio update themed video. So look out for that. But other than that, I don't know how often I'll be making videos until it's really much more feasible to be making videos. I don't want to force any narratives. I don't even want to look at what people are talking about trending, because I know none of that matters until liquidity improves. So bear with me if you really need to reach me, if you want to follow my day-to-day. I do still tweet a lot, so you can follow me on Twitter at VirtualBacon0x. Day-to-day stuff, If you have questions, I'm still here. Or you can join our community, the Coiners. We chat in there. But don't watch too many videos and don't overthink altcoins until liquidity conditions improve. Okay, that's it. That's all I have for you guys. And thank you for watching. Subscribe to the channel, share it with a friend. Hang in there, we'll be okay. And I will talk to you, see you in the next video and next live stream.